Back to another day of charting. My name is Justin, and today we're going to be talking about Tesla, the new stock market leader. Why? They crushed earnings. They obliterated them. It seems like there is nothing that Elon Musk cannot do. So we're looking here quickly at the numbers. We can see that Tesla reported first quarter EPS or earnings per share of $2.86 versus 39 cents year over year. First quarter adjusted EPS of $3.22 versus the estimate of $2.27. And then revenue coming in at 18.8 versus 17.92. That is a beat on the top and bottom line. And the revenues grew by 81% versus last year. So what I want to talk about is that it appears like Tesla is now a new stock market leader. We talked about this on the weekend, talked about it yesterday, talked about it on Monday, talked about it yesterday. And what this really feels like to me is when we had last earnings season, we had Facebook coming in with the big stinky, right? So we had Face Stink coming in, and then we had Amazon coming in after. So Facebook provided a very negative reaction, and then the next day we had Amazon. Let me see if I can actually spell this. AMZN. Woof, that's terrible. Pretty much crushing the market. And what happened? Pretty much what happened is the value from the Facebook decline transferred over to Amazon. And the number being quoted for today for Netflix is that it lost about $50 billion in market cap. So why does that matter? Well, it matters because, again, Tesla today worth about $1 trillion, 1.01 at the close. As a reminder, roughly every 1 point on Tesla is worth about $1 billion. So by being up here by roughly 5% on what? $1 trillion, it pretty much means that Netflix's market cap transferred over to Tesla. Just like what happened during the Facebook and Amazon report last season. I would also note that Tesla here is basically reversing the move from today. It's down by $51 versus yesterday, currently up by about roughly 40, which means it's actually still net lower than it was at the open. But the sentiment is going to be very bullish here. And the other reason why I call Tesla a new stock market leader is because even with the decline today, if we look at the year-to-date performance here, Tesla is the least red. It's actually almost green. It's down here by 2.71, and this is factoring in, I think, the after-hours price here. So year-to-date, as of right now, Tesla is the leader out of the trillion-dollar company. Why? It's down the least, and it's had an incredible move. It's more than 10x. So what does this mean? Tesla appears to be a leader. It appears to be really strong. And we also mentioned that Elon tends to get very cocky going into earnings when he knows he's got a beat under his belt. And no surprise, Elon's been out there, right, swinging his, all around, talking about Twitter, wanting to buy them out. And even today, before the earnings report, he's out there talking about how I'm going to get a tender offer. So I believe what Elon is looking for is the trifecta. He's got an earnings beat. He reported on 420, by the way, happy 420. And that actually happened exactly at 4:20 on the East Coast as I'm recording it, right? Another clue there. And then finally, he's got some tendies, right? So he's got a positive earnings report. He's beating on 4:20, and he's got a tendies, right? He's got a 10D offer or a tender offer for Twitter. This seems like something he loves. And someone on the spectrum, he loves things that are repeatable, and he likes looking cool. Right now, he looks pretty cool. I'd also say that Elon appears like he is the next Steve Jobs. When Steve Jobs came back to Apple, people were very skeptical in terms of him being able to turn around his company. People keep doubting Elon the whole time. And yes, he's eccentric. Yes, he's bizarre. But there's a very fine line between genius and insane. So let's move forward and talk more about the stock market because there are some exciting things that happened today. But just to wrap up on Tesla here, even with today's drop, again, it was 5%. Technically, no damage on the chart. Technically, we still have a cup and handle with the handle formed, and we actually even have a higher high and a higher low versus last week. It's not by a lot. It's 31 cents, but it's a save. And Tesla appears really strong. To be honest, I don't know how it's not going to go higher from here. Is it going to be enough to power up all of big tech earnings? I don't know. Let's focus on that as we get through to the end of the week and into next week. Just a quick reminder that we also have Jerome Powell speaking tomorrow, and I think I have my card I can bring up really fast here. because we did get through some really big events. So before we look at some charts, let's just understand where we were versus where we are. So in terms of the key dates, we can note that we had Netflix earnings coming out. It was like face stink last report. And then Amazon came in with the Rivian benefit and the windfall, coming in with that huge crush. Pretty much what happened here, right? Netflix down, Tesla up. So the question is, into tomorrow, with the jobless claims and with Powell speaking, where are we going to be? I don't know, but we're getting some very positive clues here. So anyways, we got through the most important dates here. Next week, we got Microsoft, Google, Facebook, Amazon, and Apple. And a reminder, Apple is expected but not confirmed to be doing a $90 billion buyback. So if we get some negativity from this pack here, Facebook's probably going to miss. I'm hoping that Apple's going to come in with a huge beat to wrap up the end of the month and wrap up the rest of the earnings season. So whether or not it happens, I'm not sure. But again, looking at the key dates, we got through the most important ones here. Now we got Powell in focus for tomorrow. And the reason why we're looking at this first is because we want to understand the fundamental backdrop before we have a look at the technicals. So again, fundamentals tell us what should be on the watch list. Technicals tell us what we should be doing for entries and exits. Finally, looking here at the base case. Well, TINA, there's definitely been some tests. Right now, it appears like TINA is still in play. Is it confirmed? We have to get over 454, but as of right now, we're seeing positive signs with early confirmation. We got to close out the weekly to confirm it. Bulls and bears fight for direction with no edge. Would still say there's no edge. We're hovering on the 50 weekly for SPY. We'll look at that in a moment. Earnings season, right? Starting to confirm it. Tesla's pretty much out there stealing the lunch from Netflix, just like we saw Amazon steal the lunch from Amazon stealing from Facebook last report. So in my opinion, there's no change to the S&P. Why? $50 billion in market cap lost by Netflix, $50 billion added by Tesla. And do you even see the Netflix block on here? Nope. So what does that mean? Well, Netflix going down by 5 has a smaller impact on the S&P than Tesla. Why? Its block is smaller. Again, remember, the S&P is weighted. So the bigger the block, the more important it is. So what does that mean? Tesla's pretty important. It's a lot bigger than Netflix. The net effect for the broader market should be even more robust than what we saw with Facebook versus Amazon last report. Why? Well, again, maybe it's actually about the same. I don't know. It looks pretty close. Anyways, why bull or bear? Has anything changed? Dip into earnings, easier to rally. That's right. You go, Elon. Whoop. So, right, there's the, it's down by 0.8 on the week. There's our drop. It happened today, down by $51 or 5%. And there's the squeeze. Are we going to hold it into tomorrow? I don't know. But as of right now, it's back above 1,000, and there is a risk on sentiment. And I think there is some relief. Why? I think a lot of people were walking on eggshells today. And that's pretty obvious by looking at the fear and greed indicator, right? We're back in 40, back into fear. So hopefully we can find some relief tomorrow and trend higher. All right, so the bulls, dip into earnings, easier to rally. Absolutely, the bar is very low for these tech companies, right? Netflix came in first, right? Delivered that 1-2 punch and pretty soft reaction. Let's see if Tesla can actually drag us up tomorrow. All right, 454. So for the bears, impenetrable fortress, 454. As of right now, yes, we still got to rally up by quite a bit to get there. Where are we right now? Need another 10 points, right? Come on, baby, let's go. Get this 10 more points. Let's do it. DXY and TNX breakouts. Yes, right? DXY is still above 100. It back tested 100 intraday today. And right now it is sitting at the low of the day. The low is 100.22. Technically still above that $100 area. Oh, where did my lines go? Okay, anyways, we have our W here. Oh, what's going on today? There's our W, and we know that if we break through that pattern, we're looking for roughly 106 or 120. But as of right now, it appears like it's stalling out at 100. Let's watch. Again, as of right now, it's still above 100. It's just back tested. It's just one down day. Can't call it down and out quite yet. TNX. TNX is notching in a red day too. So I think this is moving on the back of what the European Central Bank said today, where they could begin rate liftoff or bond tapering. I forget what they said, starting in July. So what does that mean? Well, treasuries are down, dollars down, and that is positive for America. Recession risk, yes, but again, in my opinion, again, even from Goldman, we talked about it yesterday, not really a high risk right this second, so we're going to discount that. And then tech leading the decline. Remember, that's technology. It's not Netflix. So Netflix is not the market. Netflix is not the internet. And Netflix is not media. It is a representation. It is not the end all be all. Surprises, earnings. Russia, there was a pretty positive report today about, again, people who were at the Kremlin. There was 10 people who were saying that they're top advisors and they're starting to like what they're seeing a lot less. It does not mean that Putin's going to lose power. It just means that it appears like there are some chinks in the armor. So there we go. And then Powell, right? That's the most important surprise here. So very important. Whatever we're saying here, we need Powell to confirm. Why? This guy's the most important person. He's more important than Elon. Right now for the stock market, he is 100% more important. Let's move forward and look at some technicals now. So here we go. There's two things I want to point out. Let's look at QQQ first, or the Qs, because this is where we were. Man, what's going on here? That's what happened. Oh, okay, there we go. I was on the wrong board. There we go. So looking here at QQQ, we can note that this pattern here is the inverse head and shoulders that we're watching. Again, as a reminder, we have decreasing volume, right? Still decreasing, a little bit bigger today versus yesterday. But where do we close out? Roughly on the low going back here to early March. Also a low here going back to early February. Pattern is intact. We gapped up to the 50 and rejected, so there's still indecision. But what do we have here? We got a three candle pattern here where we got higher highs and higher lows, but we're still not over the 50 daily, let alone over the 50 weekly, right? We got to rally up by another 20 points to get there. That's a lot. It's 7%. So for us to get to there, what we have to do is actually take out today's high, and that would print another higher high and another higher low. I don't know if it's going to happen tomorrow. I would really like to see us back above 348 going into Friday if we can't do it tomorrow. And this pattern is the most important one, but as we look over to SPY, I'm noticing a very critical level which got tested today. The low today is 443.48. I can probably better illustrate this here on my hourly chart for SPY because I made a trade based on this. So looking back to here, I noticed an inverse head and shoulders pattern forming. It's sloppy. It's not perfect, but into the close of the 2 o'clock hour, we note the low here is 443.48. And the low that I'm watching here is going to refer to the arrow. And the arrow here goes back to April 6th, where we got 443.47. So what do we got? We got a 1 cent higher low on the inverse head and shoulders neckline. And this area here is a higher low. So that's a bounce. We got an inside bar to close it out, but it's a higher high, higher low, lower high. And we got a buy into the close. And what was it today? It's Wednesday. It's Wednesday. And we closed down by 0.1% or 43 cents. So Elon delivered an after the hours 420 green move. He's got a 10D offer and he is feeling good. That's what it looks like. So the broader market, that goes back to April 6th. That goes back to these days right here. So, right, we got our low here, 443.47. Next day, we stage what? A higher low, 443.53. Sorry, so what are we forming? A daily inverse head and shoulders. Yes, let's go, right? This is what the bulls need. So we see an IHS forming on QQQ. We see an IHS forming on SPY. And what I would note, look at the volume, right? Is the red bar bigger than the green one? Nope, not today. So frictionless to go higher. And even with all the uncertainty of Netflix, the market actually did really well. Last thing I'll point out here is the gap up and flush into the close means that, what did we do? We ratcheted up the fear. We tested everyone's hands. And if they wanted to fold, they got every reason to do it today. They wanted an excuse to sell. Market gave it to you. Page won't load, but we're at 40, as we noted before. So we're at 40 on the fear and greed index. Got really close to going back into neutral, then we throttled back. So the last thing I just want to look at here is whether or not there's any damage on these weekly charts. Notably, SPY. Right, let's look at SPY. Nope. Bouncing up the downtrend, back over the 50, back over the anchored VWAC, back to the all-time highs, which goes back to here. That's where the orange line comes from. And honestly, it looks great, right? Bullish engulfing candle versus the previous week. Last week's high, 445.75. Yeah, we were spending a large part of the day above that, settling back below. And we're looking for that volume confirmation. QQQ. Not quite as clear, right? Pushed up, prices covered, sold it off. I don't know. It looked a lot like this right here, right? Try to get it higher, dump it down, try to get higher. If we're going to bucket, we have to pretty much get the confirmation into Friday. Cannot afford to stall out. We're too close to our neckline here. Too close. I actually want to have a look at BTC today too. What is BTC doing on a weekly? Let's have a look here. Oops. Tied everything. Let's look at a weekly chart. Nice. It's up 4% on the week. That's not bad. Let's look at ETH. Right around the 50, just backing off, up 3. So BTC is actually leading. Okay, interesting. ARK. ARK's in the dumps. Better see this thing reverse tomorrow, right? I want to see some risk on appetite. But what this is basically telling me is that not every tech company has the ability to deliver what Tesla can. There's a select few or a handful of stocks that are very strong, right? These ones right here. And all the growthier ones, which are, again, innovative, disruptive, but unprofitable. That's what ARK basically is. I want to see ARK starting to go up. I see everything else. GTEC's hovering here. That's the Goldman Sachs Future Tech Leaders. It's basically ARK, but by Goldman Sachs. At least it's treading water. I'll say that. It's down by 5 cents. So again, let's see some ARK reversal. Otherwise, everything looks okay. And if we look at our big names here, again, Tesla looks great. Where are we in after hours? Again, where we are right now versus after, I don't know. Above 1,000, it's good for me. There's no technical damage. Looks fine. Low volume sell-off. That's a trap. Apple, even with the move, right? Up on the down by 17 cents, up on the week, back above 165. It looks like it's ready to go. Let's do it, Apple. Microsoft, right on the green line. A little bit less sure why we got a gap down to a lower low. We're currently at the high of the week, which means that no one's really fighting the move. It's indecisive. It's right near those yearly lows. I want to see it push off. Amazon. Again, price discovery sold it off. It's green on the week, 1.5%, down on the day by 2.6. Thank you, Netflix. It doesn't look terrible. It doesn't look great either, right? It's below the 50 MA. Got to start moving higher. We're off the green line, though, so there is a bit of a safety of margin here. Roughly 8% for us to revisit that green line if it's not a great earnings report next week. GOOG. Yuck. Inverted hammer, right? It's green. It's up by 20 bucks or 0.8%. Rejected off the downtrend. Let's watch it tomorrow closely. And then what else we got? NVDA. Looks almost the same as Google, right? Right in the green line, right on the yearly lows. Rejected off the VWAP, off the anchored VWAP. Elevated volume, down by 3% on the day. Up on the week, though. Got some mixed signals here. I don't know. And then looking at FaceThink, right? Only one that's actually expected to have a miss. And I would have expected to see Facebook down today. Why? Again, like we talked about before, Facebook versus Amazon, just like Netflix versus Tesla. And what it appears like is that when we had concerns about peak Facebook last report, it was not peak social media. Look what Elon's doing with Twitter right now. It was peak Facebook, and Facebook is expected to go lower. So what does this tell you? Well, people are discounting Facebook's earnings report when they look at what happened in Netflix. Why? Netflix was the gold standard when it came to streaming, just like Facebook was the standard when it came to social media. But just because you have the first mover advantage does not mean you're going to maintain it. This is not a nice chart at all. This looks terrible. And the whisper number is also not all that great for Facebook here. They report later on the 27th, but that's a miss. They report these numbers, they're going to get punished by the market. So whether they've been punished enough already by being down by, right, 777, not a lucky number today, or down by 5 on the week, I don't know. With that said, if you want to know a wider, deeper review of what we prepared going into this week, I encourage you to watch the video, which will queue up here in a moment. Otherwise, I wish you a fantastic trading rest of the week. And please just be mindful that we cannot be blindly bullish or bearish. We got to let the charts dictate what we are doing. And with that said, I look forward to seeing you tomorrow. Thank you.